Hey guys, how's it going? And welcome back to Smart Money Minds. In today's episode, I'm going to be talking about a simplified version of how the economy works and why I think that there's going to be a recession coming in 2020 and why it's going to crash. So firstly, what is the economy? The economy is a combination of all the marketplaces in all these different industries. For example, we have natural resources, oil, technology, Medicare, financial services. All these industries put together make up the economy of a country. And so there are two ways that the economy can grow, which is through actual productivity, so meaning that people having jobs in these industries, people working, things are being traded, things are being built, etc. And that leads to a straight line of growth. However, what drives the economy into a boom or a bust is a thing we like to call debt. So that would be borrowing and lending money. And by borrowing money, we're able to exponentially grow the economy faster. People can buy things that they wanted on borrowed money, and they can pay it back later. Or they can buy that house or even multiple properties and carry mortgages. However, it does come at a cost. By borrowing money and allowing us to grow exponentially, we are essentially borrowing money from our future self in order to use it right now, which is totally fine if you use it moderately. With borrowed money, the economy can be stimulated. People are spending more money, more things are being produced and bought, more people have jobs for services, everything is good right now. And this is a period that we call economic expansion. The government's job, along with the central bank, is to control how fast or slow the economy should be going. So they do this by controlling the interest rate. When we borrow money from other people or from banks, we have to repay them, and with interest as well. So if the interest rate is high, then it makes it harder for us to borrow more money. So the Fed's job is to give people a standard rate of interest in order to control the economy from growing too fast. So when the economy grows, things become more expensive as more people have more money to spend. And this is called inflation. And the government wants to make sure that this doesn't go out of control where things become extremely overpriced. So at this time, they would increase interest rates so that it slows down everybody from borrowing more money. And if the central bank starts to decrease interest rate, then people will be able to borrow more money again and stimulate the economy again. However, it gets to a point where people have borrowed so much money that their interest rate and repayment is getting to be more than their income. So what happens when people can't pay back? They start defaulting on their loans. They start spending less money in order to save up and pay back. They start getting into financial troubles and start selling off their assets like their cars or their houses. This is the opposite of the boom that we were just talking about. Now we're in recession. During recession, people feel poor. Their assets that they bought on borrowed money is now worth less than when they bought it previously. Now they may have to be forced to sell those assets just to repay other debts. Because of the debt we accumulate, nobody else is able to borrow money, and the government and central bank will need to control this as well. So they lower interest rates, start printing out more money, and start taking some money from the rich and giving it to the unemployed masses. And once all the debts are either defaulted or paid off, then we can start this cycle again of borrowing and lending and getting into debt. Since interest rates at this point will be very low, people will start borrowing again and thus restarting the entire cycle. So now that you understand the economy a little bit better, I want to tell you why I think that the market is peaking right now and it might crash soon in near the end of 2019 to 2020. I talked about why people are buying up gold if there's a risk of recession, right? So look at the recent gold prices here. they're breaking out bullish on the monthly trend, and because it's a monthly trend, it takes a lot of time for this to develop and explode out like this. Because the stock market is affected by buyers and sellers, a lot of buyers seem to be thinking that a recession is coming as well. That's why they're buying up safe haven like gold, and thus spiking the price up and increasing the demand for it. The second thing that points to a recession that I see is the inverted yield curve. What this means in simple terms is that people see more risk lending out money for the long term compared to the short term. They would get a better rate of return if they're just lending out for the short term now. Generally, it's the opposite. Normally, lenders get a better yield when they loan out money for a longer period of time. So that means that lenders are seeing a higher risk of uncertainty in the near future. Another reason for a possible recession coming in 2020 is the US tariffs with Mexico and China and all the trade wars that are going on. And it's because one tweet can move billions of dollars. When Trump puts some news out on his Twitter, like the stock market either explodes upwards or dumps downwards. So it's hard to predict market movements when there's so much volatility and uncertainty between these giant world economies. And this puts a lot of stress on the economy itself, so people are more likely to hold on to their cash and not invest, thus fulfilling this, or thus helping this self-fulfilling prophecy that a recession is coming. And also, as a side note for all those Canadians out there, what I'm noticing is that the real estate market is slowing down in major cities like Vancouver or Toronto. Prices have been dropping, and so that means that prices can't push any higher, meaning that there's less profitability in construction, so that means less construction, fewer jobs, and the trickle-down effect just continues for the economy. So by understanding this, you're learning that the economy is what drives your money to have a lot of value or very little value. Are you using a lot of borrowed money to buy a sports car or luxury items? Perhaps you're overextending yourself when you're trying to buy the house of your dreams, knowing full well that you may not be able to pay the mortgage back with the interest rate. We need to be aware of where the economy stands by looking at things like central bank interest rates, job reports. Do a lot of people have high-paying jobs? Or the unemployment rate. Do a lot of people have jobs in the first place? And housing prices. Are people overspending in their housing? Political changes. Is there going to be an election coming up? Or is there going to be new laws coming in place for certain industries? What about world events? Is there a war somewhere, or is there a huge trade embargoes between certain countries? We're able to get a better idea of what part of the cycle of this economy we're in. When we can time the market better, then we're not going to be rushing into buying assets in a hype market. Perhaps we can save some money to buy assets for cheap when the recession hits. Then you can ride the next cycle back up and then sell your assets for high again. With this in mind, tell me in the comments below where you think the economy is right now. Are we in a boom, or are we gonna be hitting a recession, or are we already in a recession? Let me know where we are, where you think we are, or do we still maybe have a long way up? And if you enjoy this video, make sure you hit that like button, subscribe to my channel, and then we'll see you guys next time.